Good afternoon, it's 1 o'clock and time for the Wall Street crossover show sponsored by Admiral Markets and featuring their senior market commentator, Darren Sinden. How are you today, Darren?
Well, it's still full of cold, Zach, but pleased it's heading towards the weekend.
Well, you seem to be better than I am, actually. You seem to be, you were worse yesterday. But anyway, you've bounced back. The market's not bouncing back, though.
No, I mean, to be honest, there's not much incentive for them to do too much ahead of the weekend. Obviously, the big news is Wednesday, Thursday next week with the Fed and interest rate decisions, and I can't think that there are any prizes for being brave ahead of that, where it's still in the balance, and could go either way. Although we think they won't raise in September. There's nothing to stop them, playing beggar thy neighbour and doing it anyway. Right,
and the other point is, I mean, could the market surprise us and just go sort of totally dead, waiting for that, rather than...
It's quite likely that it will, I think. I mean, as I say, if I were managing a significant portfolio at the moment, I would be, very happy to be on the sideline and just watch from afar, as it were. And then you'll be a much wiser and better informed person, next Friday than you are today.
Okay, well, let's look at the data released over the European session.
Okay, well, quite a few data points today, but I've just picked out three which exemplify our idea of an uneven European recovery. So first of all, in Germany, the Harmonised Index of Consumer Prices, or HICP, this is the ECB's preferred measure of inflation. And we look here at the numbers for August on a year-on-year basis. Plus 0.1% was the read. That was bang in line with the forecast of plus 0.1%, and the prior read, in fact, of plus 0.1%. So in Germany, there is very, very modest inflation, and it's not growing or changing, as we can see. Meanwhile, the same number in Spain came in at minus 0.5%. Again, bang in line with both the forecast and the prior read at minus 0.5%. So there is disinflation, or if you prefer, outright deflation in Spain, despite their economy bouncing back very strongly. And then to further muddy the waters, if you like, Italian industrial output numbers for July, year on year, and they've had a storming result here, plus 2.7%, 3 times the size of the forecast of plus 0.9%, and an even bigger multiple above the prior read of minus 0.3%. So something went very right for Italy during July. The question, I suppose, is whether they can continue to do that.
Well, they deserved a break, I think, after all.
Yeah.
I think there's only been bad numbers in the recent past.